it's my year, yeah.
Is this thing working? Are we on? We're back. Okay, we are back. Good morning, everybody. Welcome to Morning Show, Stock Market TV. Spencer and Steve, JC. We missed you guys. Hope you guys had a great weekend. Hope you had a good back half of the week. Hope you enjoyed that conversation that we aired on Thursday between Steve, JC, and a certain author of a certain series of books called Market Wizards. If you've not checked out our conversation with Jack Schwager, it is on the channel. Just click on videos. You'll see it. It aired Thursday morning, and the guys had a blast with that. Okay, we're back. Markets are still doing what they're doing, but we're in earnings season, so that's exciting for some of us, right? We'll talk about that. We have some things to cover that happened from the back half of last week I want to get to. I know JC has charts. I know Steve has charts. We have James Bartelloni on the show today. And yes, I did get a new haircut. Thank you for noticing. Okay, that's the end. Ian Cully will be on as well later on to talk some FIC. Let's do it.
All right, are we back?
We're back. We out here.
I was hanging out with Steve Strazza down in Miami, doing a little sweating. No big deal.
I had a sweaty moment or two. Yeah,
It was
got
warm.
some great color though.
It was warm. You came in with great color though. You came in. I am pale AF. Man,
Yeah,
what a
yeah.
weekend. Went to Price is Right on Saturday. That was cool.
Well, first, how was the thing? How was the conference?
Yeah, Miami
We
was
saw that
great.
picture.
Anyway, the Price is Right was fantastic.
Can we show that picture?
What picture?
You got all
Oh.
dressed up, huh?
From Instagram?
JC did his best Brett Schaffer impression at the
We'll
Price is
save
Right.
that. It was not my idea. It was a group theme situation. The girls planned it. We'll save that for recess. I got a couple of picks that were good.
All right.
For recess.
So the conference was lovely. Saw some of our friends, not too many though. Jeff Hirsch was there. That was nice. JC and I presented Thursday afternoon. Had a full room. JC's
Did
mom.
have a full room. You know, Strazza even said it before because it was like, well, what are you expecting? And Strazza was like, I don't really know, but usually we're pleasantly surprised with these sorts of things. And
Yeah.
and you nailed it. And we were. I thought it was a great crowd for our presentation. Also, it was put on by the folks who put on the Money Show conference, but it wasn't anything like any of those money shows that we've been to in the past. This was like a more private, intimate setting, which I really enjoyed.
Far more intimate. Our session was very interactive, a lot of questions.
Yeah.
I felt like we were just having a discussion, and it was lovely.
My mom came.
JC's mom saw him present live for the first time, believe it or not, which I found hard to believe, but I guess there haven't been many events in Miami. This is more of a new thing.
Zero.
First money show event in Miami ever.
Yeah, mom was there. My cousin was there, and my cousin's a ball buster, and he was like, "JC, that was great." So for him to say that took a lot out of him. He wants to tell me you suck at this. I don't know why you get paid so much. That's what he wants to tell me. But he gave me a compliment. That was tough for him.
Lovely weather. Had some good sushi. I just couldn't help but stay an extra day, so that was nice.
Straz is so Miami. He's moving to Miami. All right, let's go. Let's hit it. Markets are moving.
Are they?
Yeah.
That's the wrong bumper, yo. Who hit that shit?
Come on. Archer takes 2 days off and he forgets how to do this.
Taking off the rust here.
I love it. I love it. All right, let's do a quick little market rundown. Dow futures, ready for this, up 300 points, 330 points. That's like almost a whole percent, right? So 330 points. I'm old enough to remember when 300 points was like a big deal. So 86 basis points, almost a full percent up this morning for Dow futures. S&P futures up 40 handles, about the same, about 80 basis points. NASDAQ futures up 160 points, up almost 90 basis points. And then here's the big one. 30-year bond futures getting the crap kicked out of them again. after a little bit of a bounce on Friday, they came in, knocked them right down, right back to the lows for 30-year bonds. Wow. Very impressive just how little demand there is for that particular product. Gold futures are flat this morning, hanging in there just under $2,400, believe it or not. Silver up again, 28.66, up a full percent. Copper, that's the big one, up almost 2%, 433 on copper futures. Crude oil down 70 basis points, hovering right around $85. You got the dollar slightly down this morning. Slightly up this morning with the yen selling off again with bonds, I might add. That relationship remains in place. The volatility index, highest readings that we've seen since October, November last week. Worst week for the stock market all year, worst week since October. The VIX down slightly this morning, still above 16 as a U.S. 10-year yield around 4.4%. And let's check in quickly on the old funny money. We've got Bitcoin after a steep sell-off on Saturday. I remember pre-gaming for The Price is Right, watching Bitcoin down 5,000 points. Hanging in there just fine, really right around 66,000, flat on the day. You got Ethereum, 3240, up 2.5% on the day. You got Solana back to 150. Boy, that was quick. Down almost about 0.5% on the day. Total crypto market cap, Spencer Israel, you ready for this?
I'm ready.
Only 2.35 trillion for crypto. What do you think about that?
I think we were in this fives. We were in the 0.5s or 0.6s not too long ago. So
how quickly they fall.
The bond market's been chirping at us. Are you listening?
I mean, I talk about it every day. It's the first thing I look at, not just in this environment because they're crashing every day, but just in general. Crashing. I like to make fun of myself that I can't have a real conversation about the stock market without referencing the bond market and putting that into context, this environment or otherwise.
So what's it all mean?
What does it mean, Basil? It means rates probably aren't going lower, right? It can, to me, it's that same theme. Commodities continue to do well. Interest rates keep going up, right? Those types of stocks are the ones doing the best, and until the bond market stops crashing, which again, we can argue whether it's a crash or not. I see line go down for 4 years, line go down. You know what I mean?
It's going down a lot.
I just keep going down.
Yep.
But I think that's the big story. Higher interest rates, inflation protected treasuries, making new highs relative to nominal yielding treasuries. You see the Big Mac index.
Oh God, talk to me about this. Sounds like something.
No, but I saw a $25 thing that went viral. McDonald's thing.
What? Their meals are expensive. Yeah.
Yeah. Breaking news, Steve.
Yeah. Right.
All right. So here we go. So here, what are we looking at? We're looking at slide 2. Throw that up there. Right. So this is the Big Mac inflation as opposed to that CPI thing, whatever that is.
Wow.
See that? I mean, the prices of Big Macs. I mean, this is a serious indicator. Can we just give a big shout out to the Federal Reserve Bank of St. Louis, taking time out of their day to put out such quality work? Right? No?
Well,
you don't appreciate this from the
what's interesting to me? I wonder why does it lag so much?
Who says it's lagging? One would argue this is leading.
No, but before.
What do you mean?
All through 21 and 22.
Yeah?
Yeah. So why was it lagging so much and only now?
Because the CPI is a made-up number that your government is lying to you about.
It's not made up.
Inflation is driven by supply and demand. What do you mean?
It's not made up.
What?
It's not a made up number.
So demand for Big Macs is suddenly higher? That doesn't. Why would that be?
No. The price of Big Macs. What are you talking about, Spencer?
Big Macs are delicious. People keep buying them.
Yeah. What are you talking about, Spencer? The Big Mac inflation is a real indicator that's driven by supply and demand. The CPI is just some number that your government lies to you about.
Well, but the point I'm making is I'd be curious to see if in a year or so the blue line looks like the orange line now.
Orange is supposed to
No,
catch.
the orange line is going to look like the blue line because the government can't lie to you anymore.
Okay.
Can you throw up my chart of the 30-year yield that I just dropped in the chat? Because I think this is important context. Whenever we have these conversations, I think it's worth zooming out 50 years on the bond market and just looking at where interest rates are today versus where they came from. Markets trend. This is a brand new uptrend for rates. So JC's on here talking about the bond market crashing every other day. In the context of this chart, makes a ton of sense. This is a structural trend reversal. To think that, the rally phase or up leg that follows a reversal like this would only last a year and then fizzle out, I think is silly. So this shouldn't be any surprise to anybody. Inflation expectations tend to follow interest rates, right? Maybe
Throw
they
up the
tick
next
higher.
slide.
We're in a rising rate environment. When you think about the assets that tend to perform better or outperform when rates are elevated, and get used to it, because who knows how long it
Here's
lasts.
what gets me, right? So the Big Mac indicator is funny, right? Like it's funny, haha. The government's lying to you, funny, haha. Like, oh, that's great and everything, right? This is real, right? This is and pun intended, I suppose. This is as real as it gets. We're looking at inflation-protected Treasury securities, that blue line, inflation-protected Treasury securities relative to regular, good old-fashioned nominal yielding Treasuries. So in other words, what the bond market is literally pricing in for inflation, not the government lying to you, not the board of directors at McDonald's raising Big Mac prices. Like all that's great and everything, but this is real, right? This is actual dollars and cents, money being put to work, pricing in higher inflation. And it's not a coincidence that that line looks exactly like gas prices, right? That makes all the sense in the world. So all that other stuff, funny, haha, but this is legit. This is real. And what Strazza's talking about, higher interest rates are essentially pricing in what this chart is suggesting, right? No?
Throughout my career, I found this is the best overlay for inflation and inflation expectations. It's gasoline. It never lies. Sure. Could these charts move in different directions? Absolutely. Not the bet I'm ever going to want to make. And right now, they seem to be, moving more or less in lockstep. Gasoline moving first, inflation expectations catching up. We talk about interest rates moving higher almost every day, it seems like. How high does crude oil go? How high do energy stocks go is the question. JC likes to talk about how just buy energy. That's your hedge. It's worked great. I think it continues to work great. I think we're
Yeah,
just
the 60-40 portfolio is not stocks and bonds. As dumb as that was in the past, it's way dumber now. Especially when stocks and bonds are moving much closer together. Go to the next one.
It worked in the past. That's why it's a thing today. You know what I mean? It just doesn't mean it's going to work tomorrow.
Listen, just because it works in practice doesn't mean it has to work in theory, right? Here we go. What do we got here? Dancing together. Strazza, are you going to bet that these two are going to stop dancing together?
I'm so over the yen. No.
Why are you over the yen? What's your beef with the yen?
This has been because it's not the same information that we used to get from it. But
tell me. All right, so it's just a coincidence that 30-year bonds and the yen are trading tick for tick?
This has been a great correlation for 4 or 5 years now.
What are we thinking here? Yen making new lows, getting the crap kicked out of it again today. What else is new? With bonds, again, what else is new?
I think a bond short would have made a lot of sense.
I don't know.
Sure.
And we talked about this. It's just there were easier trades. Look at 30-year futures literally as we speak, breaking down to the lowest level since Thanksgiving. Wow, what a disaster this thing is. Yen making new lows, 33-year lows for Japanese yen, new 5-month lows for bonds, right? Is that 5 months? December, January, February, March, April? Almost 5.
Jerome Powell just continues to do such a masterful job. One of the greatest Fed chairs in the history of markets. Really impressive.
I'm not qualified to opine on this. I have absolutely no idea.
I mean, look at the market.
Nor do I care.
This has been the toughest interest rate environment to navigate my whole career easily.
Your whole career, because your career is so long. Your whole career.
Yeah, fine. It still says 15 years. Going back to the financial crisis, it has not been easy. He dealt with a pandemic. He dealt with the highest inflation in several decades.
Who cares? Tell me
Highest
why I
level
should care.
interest rates.
Tell me
And
why
look
I
at
should
the
care
economy.
about this guy and how hard
Look at
his
the
job
economy.
is.
Look at the unemployment rate. We're thriving here.
Right.
Look at our risk asset
great.
market.
Why should I care about this Powell guy? What does that mean to me? Tell me why I should care.
I'm not. It's a Monday morning. I'm not going there. I had a long weekend. I had the flu this weekend. You didn't feel sick when you got back? I got some sort of conference bug, man.
Nah, man, I felt great.
I don't know if it was food poisoning, like a one-day flu or what.
Nah, man, I felt great.
All right.
Still do. Feel great.
Good for you.
Next chart, please, Mr. Israel.
What's this?
This is the money. This is the money shot right here. Give it to him.
Oh,
There
sorry.
it is. Come on, Spencer.
Sorry. Sorry.
There it is.
I like this. This is
I'll
lovely.
do you.
Nice.
You like
nice
it.
Work here. Nice work here. All right. So risks are elevated below 120 and 164 in the equally weighted indexes, period. That's it. Downside risks are elevated. Who knows how long this corrective phase lasts? I think it's already well underway. We have like multi-month, we had momentum divergences going back to December and all these indexes. Finally now coming to fruition. I think these are some great lines in the sand for, putting on new positions or just sitting and waiting out some sort of corrective wave here. This can go into the summer. Now, don't forget, last year, great year for equities. But from July to almost November, late October, market was shit. Things were not good, right? We had a very long correction, some steep drawdowns depending on where you looked. And it was across the board, really. Why can't that happen again this year, right in the middle of a bull market? So I think that's the way we need to be thinking. Cryptos have already started. The drawdowns in cryptos are already pretty severe, depending on where you look.
Crypto chart we've been talking about looks exactly like this, right? Binance.
Bitcoin would look the same way as this.
Bitcoin, Binance, Solana, back to those former highs.
We can make a list.
And failing.
Yep. This is good, JC. Good work. Look at you.
Look at me. I'm getting compliments from Steve Strazza. How about that for a Monday? Not bad. Not bad. All right. So this eliminates the, Mag 7 or the, the largest concentration from, the largest sector ever and like all that stuff, all these fancy stats. This eliminates all of them. S&Ps are the same. NASDAQ's the same.
Can I add something to your list?
Please.
Russell 2000.
No, not the Russell 2000. XLF.
No,
Russell 2000 is nowhere near those former highs.
Oh, Russell 2000, 200. Fail breaky.
No, I know. Go to that next chart there, Spencer. 2 over. Go to the Russell 2000, and then we'll come back to the NASDAQ. Spencer, go to the Russell 2000, then we'll come back. There it is. So the small cap Russell 2000 index back to levels not seen since February. Also, the S&P 600 small cap index never made a new high. Momentum's been rolling over the entire time. So the Russell 2000 small cap index, where it was in February, still below where it was in December, nowhere near where it was in 2021.
And breath is pretty nasty for small caps right now.
Remember these assholes lying to you about breath improvement in small caps? These idiots are tweeting at me like I give a shit about their opinions.
Now, things could change. They weren't lying.
Like JC and his narrative. All right.
I don't know, sir. I don't know.
Look who's laughing now.
Mm-hmm.
Look who's laughing now. No, but seriously, if you're like a young upcoming, like technician or claims to be a technician, do you think it's in your best interest to be on my bad side? Like, think about it. Like, seriously. Like, you're trying to, like, make a name for yourself and you're trying to, like, come up in this world. Is the best way to do that to beef with me? Like, is that a good idea, you think, Strazza? What you've seen this for a few years. You think that's a good idea?
Yeah, I wouldn't do that. Who hurt you?
No, nobody hurt me. I'm good. I'm all set, man. I don't have to do this shit. I do this for fun,
Yeah.
Yeah, man, think about it. You got to be some kind of dumbass.
Yeah.
To think that you're gonna make it in this world by beefing with me. That's a good way to get ahead in life. Dumbasses. All right, let's go back to the NASDAQ. This is an important one. This is a big one because this was really impressive. So you gallivanting down in Miami, no big deal.
Gallivanting. That's what I was doing. Yep, I was gallivanting. Yep.
you were working more than I was. I was doing more gallivanting, having breakfast with the Nigerians and hanging out with Charles Payne, and then we had lunch with Rob Koifman. I mean, we were
He calls them.
I was gallivanting more.
He calls them B2B meetings, is what he calls them. That's code.
Some of them.
Yeah. No, I know. Yeah.
All right. So here's the story. Ready? We got a new all-time closing high in the NASDAQ composite on Thursday. New all-time highs. Right?
Mm-hmm.
Highest close ever in the NASDAQ.
Yeah.
But you know what was spectacular?
What?
How few stocks actually made a new high. Like, crazy. Like,
so we're seeing this across the board. This is a great example, but any universe, you're going to see the same thing. You can do it on NYSE too. You can do it on the S&P 1500. Russell 2000 has been bad, like we were just talking about. Index at new highs and breadth looking like this, it just doesn't work out for long, So,
we went back and we ran the data and we took the worst decile ever, right? So in other words, we took all of the times that the NASDAQ composite made a new all-time high, and then we counted how many stocks in the NASDAQ also made a new 52-week high, right? And we went back and we counted all of that, and we took the worst decile, and then we look at returns moving forward. Short term, it was wishy-washy. Longer term, it was right in line with historical statistics, kind of like up about 75% of the time or so, right? Kind of pretty standard. So from a longer term perspective, not a lot of significance. Short term, it's historically not a great thing. But longer term, not a big deal. So I think this is really, really fascinating, just how poorly those internals acted. Like, think about that.
And they got to a pretty healthy level. I mean, 10%. Back in December, not bad. If you zoom out on this chart, maybe not a thrust per se, but it's a high reading. And it's really come down big time, down to 1%. Ultimately, nothing. Same. We were at the same place at the October lows. Just about.
Yeah. No, it's there's definitely an interesting market behavior there. Why don't you throw up slide 9? We're getting some requests.
Yeah, I would like to talk about Goldman Sachs before we really get started here today.
See, in between people calling me a pompous asshole, we're getting some good questions about the new lows. And this is a great question because while we haven't seen any expansions in new highs, and certainly upside breadth has been deteriorating, until now, we haven't really seen any expansion in the new lows. But this is as many new lows as we've seen in quite some time, probably since October. I haven't quantified that exactly, but my guess, just kind of with the eye test, this many stocks making new 1-month lows, this many stocks making new 3-month lows. The new 10-month lows list is off the charts, but the other one's a lot more red, right?
Yeah. This hasn't been this red in a long time. So it stands out.
When do you think? Like October, you think?
Yeah.
Right? Yeah.
Absolutely. And energy
has all. Let me just walk everybody through. You want to zoom that in there?
And if you want to, find some silver lining or talk about positive development or bullish development from this chart, energy, the relative strength is no joke here.
Which is not a surprise, but let's talk about what's going on here. So first of all, this is the S&P 1500 index. So there are 1,500 stocks, right? So this includes the S&P 500 large caps, the S&P 600 small caps, and the S&P 400 mid caps. You add all those together, you get 1,500, right? So on the left, on the y-axis there on the left, you've got all the different S&P sectors: materials, communications, energy, financials, etc. And then across from left to right on the x-axis, you've got the percentage of stocks hitting new 10-day lows, 20-day lows, 63-day lows, 126, and 252. Just to be clear, 20-day lows is about a month, 10-day lows about 2 weeks, 63 is about a quarter, 126 is about 6 months, and 252 is a year.
Yeah.
Not seeing all zeros there on the new 52-week lows list also there, Strazza, right?
You're still not seeing anything to write home about.
No, but
even on
agreed. No dramatic expansion there on the 6-month or 12-month lows list, but it used to be all zeros across the board.
Yeah. Which it should be during up legs and bull markets.
Right. But it ain't that. Now, granted, that's not the part that stands out in this table. The part is the part on the left where you got all that red, right? You know what we need to do when there's this much red? Shouldn't we change the font to white? It's a little hard to read, isn't it?
No, this is done intentionally. Above 20% gets you light red, and I think it's above 50 get you dark red.
No, I understand. You're not listening to what I said. When the cell is this red, shouldn't we change the font to white? Because the black on that dark red is hard to see, right?
As it would look funny. I don't know. I think you just deal with it.
White hot letters. Josh agrees.
Yeah. We'll play around with it.
Yeah, we'll play around with it.
Conditional
all right.
Fun with formatting.
Fun with, this is how we do. All right, let's do one more before we bring on Bartelloni. What about this one? Dow Jones Industrial Average hitting new 52-week lows.
No, you wouldn't want blue either. It'd break your eyes.
Definitely not blue. New 52-week lows for the Dow. Price in real money. Good. What do we think about this?
Oh, price in gold again. Here we go. Yep, real money. I don't have much on this for you.
You don't have much on it. Should we care? What about you guys, chat? What do you guys think? Does this matter? Dow Jones Industrial Average, price in real money, making new 52-week lows. Should we care? What do you guys think? Dow Jones Industrial Average, priced in, fiat, as they say. So if the denominator in a fraction, for you math majors out there, if the denominator in a fraction continues to lose its value, then all things being equal, line go up. But if the denominator in the fraction is not losing its value, all things being equal, line go down.
So I'm going to take a couple questions from the chat here. Do you guys believe in the passive investment theory? I don't know specifically what the passive investment theory is. I believe it's just like the buy and hold.
I think it was just a theory. Passive investing is not a real thing. It's a fake. It's fake.
We both believe that there's really not a way to be a passive investor.
There's no such thing. It's a lie. It's a marketing. You know that thing where the National Association of Realtors or whatever, like that nonsense about like the American dream, like everybody should own a home, like all that bullshit. That was just a marketing gimmick. Right? It
crashed our economy. It wasn't a gimmick.
It was just like it was a good marketing gimmick. To this day, there are still people who think that owning a home is the American dream.
No, it was a real crisis, though.
But this is like that. Passive investing is like one of those like marketing gimmicks.
No. Any individual person can be passive. What you're saying is that you're by being passive, you are merely outsourcing the decision to somebody else, which is okay. Yeah. You want to debate
no passive anywhere. You're either making the active decisions yourself or you're handing those active decisions to another group.
You can be passive. Your portfolio cannot be.
This is what we're talking about here, the portfolio. Yeah.
Okay.
You could be a passivist or a nihilist or any of those things that has nothing to do with what's going on in your portfolio.
Let me move on. Do you guys think the market is going to struggle?
Believes in nothing, Lebowski.
So we had more war headlines this weekend. Obviously, anybody who's paying attention.
Don't we have war headlines every weekend?
Stop.
Depends.
These were a little bit new and different, I would say. Do you think the market is going to struggle this? I'm not a war correspondent. I'm not going to speak.
You brought it up
on CNN if you want to know why.
I don't even know where I would watch CNN
on a television. Fuck.
Here's the indicator. Never mind. Go. Forget it.
I think the market is going to shrug this war stuff off. Well, it has been for several years now, right? And wars have been going on during bull markets and bear markets, and now bull markets again. If you go all the way back to the Russia-Ukraine stuff. So again, wouldn't overthink that either. One more, some talk about Palantir. I can't invest in Palantir given my background. Without context, I don't know whether you mean you're actually restricted because maybe it's a client of a company that you work for, so you're literally not allowed to buy it. But if that's not the case, and you're just saying that you can't invest in it because of your background or your beliefs or your moral system, that's a mistake. It's just a wrong way to think, right, as an investor. We are so lucky in America to have all of these investing options and different alternatives where we could put our money, right? And really just catch any trend in the investing world. To close yourself off to certain doors or certain opportunities is absolutely insane, right? So I maybe just try to free yourself of that mindset and open yourself up to all the possibilities that you can invest your money in, right? Because More options is not a bad thing.
You got to expand your mind.
Never this or never that. It's just it's not going to help you.
So here's how I think of it. So first of all, historically, wars are good for the stock market. So let's just start there. Number one. Number two, and we have the data. Number two, for me, as somebody who's unqualified to make any sort of determinations of the gravity of any particular war or threat of a war, I'm not qualified to be able to come to a conclusion that I would trust. Right? I just don't, like, I don't trust myself with a chainsaw, so I hire people to do that stuff for me. Like, I don't trust myself coming up with a conclusion about what war we may or may not go into. I have no idea. The way I look at it is there's always some kind of war going on somewhere in the world, right? To different degrees and magnitudes, of course, of which, again, I'm not qualified to judge, so I don't, right? So for me, I ignore it altogether. It has a 0.0% weighting in our weight of the evidence and in our decision making. And it's not that, I am maybe insensitive to certain regions of the world. It's just that this is a conversation about how we're making money in the market, and that just doesn't play a role.
Clouding your mind with these things not only doesn't help you, it hurts you. You're not thinking clearly. Like, we see it all the time, even when you talk to people, even at the money show, certain questions, you could just tell, like, oh, this person's stuck. They're stuck with well, what if Trump gets elected? And this is the politics, they fuck you up. The war stuff, it really.
It's
what if Trump gets elected? Last time he got elected was one of the greatest, least volatile years in history. So I don't know, if you own stocks, that doesn't seem so bad. What I think about the Trump thing, and the Biden for that matter, investors know what they're going to get, right? You might not like it. Like, you might not like the guy, one guy or another guy. You might not be a fan of that particular individual, or you might love that individual, whatever. The point is, we've already seen it. So the market knows what it's going to get. It's not going to be like this crazy surprise. So I think doesn't that make the election and the results of the U.S. election less important because we've already seen it? We've already seen both.
Let's bring on our Bart, because Bart also can echo these statements as well. Because his way of looking at markets doesn't involve this stuff, but he's looking at things pretty holistically, right? So James Balone, today's guest, gonna bring him on the show.
We've been friends for a long time. Call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Oh, Bartelloni, my man.
Going down, man.
My friend, my mentor, my counselor.
No, I wouldn't say any of those. Friend, yes, but the other two, we're kind of both for each other.
I owe it all to you, Bart.
Oh shit!
I owe it all to you.
Well,
so Bartelloni was my CMT level 2 professor. Is that right? Level 3.
3, yeah.
Level 3.
I couldn't do level 2 because I couldn't pass it. I failed it the first time.
Did you?
Oh yeah, I hated that crap. All the normal stuff. I was like, this is just confusing me.
But before we get into the market, I'd love to hear your thoughts, because as a veteran yourself, as somebody who organizes events to help veterans, as someone who lives in freaking San Diego, right? Like,
yeah, man, I'm getting ready to go surf. I already got. I'm all set, man.
Well, sorry to keep you from your surfing, but we'll hold you for a couple more minutes. But as someone who's much more entrenched in the with veterans than I certainly am. Before we get into the markets itself, like, how do you think about wars and how that impacts the market? Do you ignore it at all altogether, especially as someone like you who's much more involved in this sort of thing than I am? I'd love to hear your thoughts.
Boy, it's a tough subject, JC. We can get serious when on this one, right? We like to have fun and a good time, but from a investment perspective, I really don't pay attention to it at all. I'm a pattern guy. That must be
hard for you, Bart. That must be difficult for you.
Well, it's interesting. I'm able to kind of like draw a firewall, right? I just look at the patterns, right? And I just go with what the patterns tell me. And invariably, the news breaks with the cycle, right? So One of the charts we'll look at is solar, believe it or not, and it's been destroyed, but the pattern's saying it's a buy. And so inherently, when you're using pattern recognition and you're using longer term time frames, what you're going to find is you end up being inherently contrarian because you're seeing something at lows or highs that no one else is really looking at. So from an investing perspective, I really don't take it. I just try not to let it in. I think as but I don't know whether it was Spencer or you said, just let it it just adds noise. From a cultural, from a real world perspective, I'm finding this is a very big deal and an extremely big escalation. And the reason it's such a big deal, and it's one thing that, I toe the middle of the road politically. I'm not even going to get involved in the craziness of our politics. But when we look at it, this is the first time that I won't call the PLO or Hamas an enemy, but what I'll say is a combatant has been able to truly integrate themselves into society. So this is a really, really sticky situation. In fact, it's probably one of the first times in modern warfare where we've had a situation like this. There is no win here, right? Hamas has done a amazing job of integrating themselves into the culture, into the community. And how are we going to defeat them if they are embedded inside this community? It's an extremely difficult situation, not only politically but militarily. So this is not good, JC. And I hate to, I'm Mr. Positive. This is not good. And I really can't see any way that innocents aren't going to be affected by this. So hopefully that helps.
But Bart, I like what you just said, or you sort of implied how something can be a big deal in one area and also not be a big deal in another area, right? So maybe
That's
from
that
a
wall.
war,
That's that wall you were saying.
from a
On one
war
side of your life,
perspective,
it's a big deal.
geopolitically, big deal. Markets, not a big deal, right?
Yeah, no, I do think we need to look at it. I mean, I've got buddies over there. They're commanding some ships and some fleets, quite frankly, right now. And these Houthi rebels, I mean, I hate to say this, but I'm like, good on them. They're a ragtag group of people who are, putting multi-billion-dollar ships at risk through, let's face it, sticks and stones. And we've got some of the most sophisticated technology in the world. So from a market perspective, it might end up hitting commerce in 6, 9 months or 12 months, right? But not anything immediate, right? But I mean, the French pulled out. They pulled out of the Arabian Gulf. I've been in there. It's not like this choke point is, something that's massive. They could shut down oil real quick, right? And then that'll have, I think, an immediate reaction, like we saw. What was it, Friday, when we had a big dump, right? And then it'll recover. When we were learning this stuff, we used to call them spontaneous fundamental announcements. And basically, there's going to be things that happen that really will rock the market, whether it'll rocket ship higher or it'll just fall like a stone. But the trend will continue sooner or later. It'll work itself out. And from a pricing perspective, there's always a certain price that the market wants to be with according to time. And it'll correct down to that. And that's why a lot of times when we have these big, huge crashes or 8% moves in 2 or 3 days down, the market's just going to where it wanted to be in the first place. It got too extended. So I do think from a personal perspective, we all need to take this extremely seriously. It's a horrific situation that I think I don't even really know who can win here, but we have seen a change in the nature of warfare that has never been seen in the eyes of the public, and the fact that we can see it all the time immediately. I just would say turn your TV off anytime something comes on about these conflicts, because it's all propaganda and probably none of it's true.
I mean, I would just have the TV off always, not just now, but yeah. Which is why I don't know how to watch CNN, because I don't have like a cable or something, so I have to like watch online or something like that. No thanks.
I don't have it on either, bro. I just don't.
Bartelloni, well, you're like a music guy like me.
Yes, sir.
Give the folks some background. In my experience, traveling around the world, meeting with technicians, meeting with traders, I have found a large segment, a larger than expected segment that comes from an engineering perspective. A lot of pilots. Jeff DeGraff is a pilot. David Keller is a pilot, right? We talk about Jeff Lay, Bartelloni. I mean, there's more and more that I'm meeting all the time that are pilots and just come from an engineering mind. You obviously, so you want to tell the folks a little bit about your Navy experience, and
Sure.
you never took an economics class. Like, give them that spiel.
Oh yeah, that's right. I can't believe you remember that, JC. Yeah, so JC and I met. I was a CMT3 instructor. He was actually running at Central Park at night. What was that book? The Schiller book. I was like, wow, this guy's next level. I'm like, are you really
Irrational
doing it?
exuberance. I was listening
Yeah,
to the audiobook.
yes. And so I found technical analysis after a career flying for the Navy. So I flew F-14s for the Navy for 12 years. I was a Top Gun graduate, strike lead. So I've flown over bad guy country and kind of understand what's going on those ships and stuff. So it's kind of crazy, right? What's
Did you
going
say
on
you
now?
flew over bad guy countries?
Yeah, people who don't like us and want to kind of hurt us, and we kind
Yes.
of want to do that to them. That's another phase of my life that I've kind of chilled out from. But yeah, I spent a lot of time flying over the Arabian Gulf, and I've been to Israel probably 15 times. So
Well,
things don't add up with this whole October 7th thing. But anyway, um, so I found technical analysis actually from Jeff Lay after I was actually selling him some software, virtual reality software. I'd never taken a business course. I still haven't. I've never taken an economics course, right? So when you start talking about the fundamentals, I'm just not smart enough to understand it, or I'm just too lazy to read through a 20-page.
Yeah, I don't think it's your intelligence, Bart. I think your intelligence is fine. That's maybe more your interest. I think you're smart enough. Don't
That's
worry.
a good part. It was probably interest, right? But this whole thing around, the waves, property of numbers, and natural law, and so I had just had an inkling that the market was stopping at a number for a reason, and that led me to really dive. I took the red pill into trying to understand the nature of our reality, quite frankly, JC, and it came through the market. That's where I learned who we are, and it's through sacred geometry and music and on these patterns that exist everywhere, right? They exist according to natural law. They're governed by fundamental properties of waves and sacred geometry ratios and musical ratios. And then the other thing too, I was talking to my buddy Ponch. We're actually working on something. I don't know if you saw Jamie Dimon came out and talked about the OODA loop. And we learned the OODA loop when we were flying because it was a way you learn how to assess how you're doing when you're fighting another airplane, that might be a mile across from you and you're fighting. You orient, you observe, you orient, you decide, you act. And what's happening is every single moment of our day, we're doing that to create our reality. So we're actually working through the OODA loop and the OODA loop in the markets. And it's quite fascinating, really, because I'd never really looked at it from this perspective. But the bottom line is the market moves in waves. Waves are basically fundamentals of music. And if they are truly moving in waves, then they have mathematical properties to them that have been around for time immortal. And if we can put that together, that's great. So what Ponch and I are talking about, and I think is a little different, is when you're in a cockpit, I don't know, you might have 10, maybe upwards of 15 different sensors coming in at one time. I listened to 4 radios at one time. I had all kinds of different sensory inputs. So from a
4
technical
radios at
analysis,
one time?
yeah, me, believe it or not. Yeah. Yeah, and they all had different sounds, like boop, boop, and at times, sometimes they come in directions, so you knew it was something coming from behind or front. It was really fascinating. But what we were able to do is, for 12 years of my life, is take all these sensory inputs and figure out the points. And so I think that's where I really kind of gravitated with technical analysis, was really around intermarket technical analysis, right? What is fixed income doing, commodities doing, global equities doing, and then obviously the big boy on the block, the currencies, right? And if you could put all these together, you see this mosaic, and there's the money is it's just moving, right? And to what you said, war is usually good for the stock market. And now we have a crisis in government. I don't think it's very hard to see that that's happening, right? So we're seeing a move from government to private assets. The only game in the entire world in town is the global Dow, right? Those 30 stocks. So all your, major funds in Europe and France, even Asia, right? They got to go somewhere. The world's on fire. They're going to go into our Dow. I think this thing's going to cook off tremendously after we get a little bit of a pullback. But oh my gosh, war's on the horizon. Okay, there might be a feint like we saw Friday, but I don't think this move higher is over by any stretch of the imagination. But I do think we've hit some significant resistance, which we can show on some charts. That'll take us down probably to maybe about a month or so. It needs to cool off, but I'm looking to buy this pullback.
Do you want to start? Do you want to start with the Dow here? I know we're getting some questions about the lithium call.
Yeah, I was gonna
Yeah,
ask about
sure.
that.
Yeah. People probably like that guy's
Why don't we
crazy.
start? Why
I
don't we
am.
start with the Dow? Why don't we start with the Dow there, Spencer, and then
That's a good
go to
one.
the New York Stock Exchange, and then we'll go to the individuals.
Yeah, this is interesting with the New York Stock Exchange, JC. We traded text on it or something. Good to see you too, Spencer. You don't have that look on your face like I've blown you away yet, but I will. You got to go to the last slide. That's going to blow your minds. Yeah.
We'll get there. We'll get there. So tell me why I should care about the Dow going back to 1896. That was before Twitter. So you're gonna have to
Yes.
tell me what the 1800s was like, old man.
Come on, man. I don't know about that. But anyway, I like TradingView. I like their data. I really do. You can get some good data at times. So this is log scale. I love using log scale, and it really works when you're looking at 100, 120 years of data, right? But the bottom line is from that, basically the start of the Dow. Now, you can see I cropped it a little bit. That's why I put that little circle there in 29. But we're bumping up against or about to smack into a trend line that's been 120 years in the making. And I mean, look at that bearish divergence too, just doing a regular 14-period RSI on there. I think we're a little extended in this market, is in the process, or should start correcting soon. And then a good correction is always a 38% retracement. That's sitting at around 25,000. So people freak out. Oh my God, that's 15,000 points. We're all the way up at 40,000. It's not that big of a deal. And when you look at it in terms of a log scale, it's probably hardly even going to register. So I do think we've hit some resistance. I do think we're going down now to soon-ish to, next week or so into, let's call it probably, there's a huge election or there's a huge swearing in of Putin on May 7th. So I think this market's on the verge of a nice correction. Let's say 10%, whatever you want to say. I don't know these stupid numbers. I just wait for a pattern. But I do think we've hit some resistance, JC, and this thing should start going down for about a month. But
All
buy
right.
it.
What
Looking to
about the
buy
New
it.
York? Let's look at the New
Yeah.
York.
So this one was fascinating. The key here is people, they draw a trend line and they're like, oh, well, what's a trend line? And what people don't realize is you're actually have a time component, right?
You're
Because
doing. Hold on. You're doing what component?
you have a time component to your trend lines. There's both price and time, right? It has to move over a certain amount of time, it has to move over a certain amount of price, and then it hits it, right? This is very important because this is a 1 point per calendar day. This is the classic 45-degree angle. And so I think it was about a week ago or so, that red line for every move up or every point it goes up, it moves over a calendar day. So this is a square out, and it's an extremely powerful square out. In fact, we're squaring out 18,091 calendar days today. That price is 18,091, right? So when the market went up and hit that red trend line, that was a perfect correspondence of price and time. Now I think when it finally topped, it was like 18,056, which was about a week ago. But on that date, we had 18,056 calendar days and a price of 18,056. That's usually strong resistance, and that's what we have happening, right? When I look at it, it just doesn't look like it's done. So I imagine that we got, again, a nice little correction going, but these are extremely important points in time and space because you don't get 18,000 day and 18,000 calendar days and 18,000 point square outs every day, right? So this correction might be a little bit deeper than we expect, but because of that, but I still think we need to buy it. And then you just throw on again your monthly of classic bearish divergence. So we have this massive square out occurring on the New York Stock Exchange Index, and we have bearish divergence. I think we're going down for a little bit. That's all. But it's not the top. Oh my God, the world's ended. I just don't see that happening right now.
All right, let's get into the lithium, and then we'll get back to the solar, which you started out with, because this lithium. So this was a note out in January. Big Bartelloni fans here in the chat asking about the lit call.
Oh, yeah. So again, I know nothing about what's going on with the global lithium supply. I think they do it out of Africa, and it's a bunch of people. I don't know, or what the latest battery technology is. To me, it's price and time. It's a chart. It doesn't get any better than this, right? So what happens is from that first low, we had a correction, that red arrow. We've had the exact, again, this is log scale too. Sorry, I didn't put it on there. But a lot of times when we don't have the same price correction, what we can do is we can have the same percentage correction, right? And so in this case, we have both the same time, which you can see by the time cycle tool, and we have the same price, and it's sitting on perfect horizontal support. This, I think, lithium's a buy, and quite frankly, we could go to new highs on this. Nobody's talking about it, right? That's when these patterns appear, and it's like,
Not
hmm,
anymore.
right? So that's a nice one. I'm long lit, and I kind of like it. Let's get it lit.
And then what's the stop? You're so trendy, Bartelloni.
This
What's the stop? New lows?
the stop is the new low. Yeah, I got in at the low.
Do you set time stops?
No,
Whoa.
no, no. That's a great question.
I know.
It's hard because if I'm going on a monthly, one of my biggest faults is I'll cut it too soon, because my gut's not doing what it has to do, and then it explodes. So when I've moved my time frame out, right? So I don't know, a lot of the listeners are day traders or whatever. I'm more of a
No,
positional trader.
not at
I've
all.
got, a business development career. I love it, right? So I'm looking to hold these things for weeks, months, days, years. So I got to give it time. So from a timing perspective, it's kind of a gut feel, but it's usually just price stops, and that's below the low.
I
So
like it. And what, you think we'll get back to the highs or not that much?
Yeah, I think we could. I mean, this could be a nice long run. Good
In-
9 months to a year.
Interesting. All
Yeah,
right, talk to me about the solar, another piece of hot garbage.
right, exactly. But if you look at this thing, it's the same setup as lit, right? You've got the same price correction in percentage terms. You have the same time correction in monthly terms. I put a rudimentary count up there. I tell people like you and I both know, my count is like my golf game. If I start counting like this and go into the subways of the subways, I'm lying. I don't know what the hell I'm talking about. But if it looks like it's pretty easy to count, I'll give it a shot. In this case, here's a bullish count with a very, very nice little stop out level, which is that horizontal green line, because I don't even think we finished wave 3 yet, if you can see that. I still think we're moving through wave 3. So in that case, we can't go below wave 1. Right, so that's what that green line represents. And the other thing is we're sitting right on the 0.786 retracement from the all-time low to the recent high. So we've got that. If you take a look at volume, we've had a increase in volume that's palpable. And then if you look at the RSI, we're down at the lower end of the bull support line. So it blew through. If you remember technical analysis for the trading professional, it blew through horizontal resistance in a bull market and reestablished itself. And now it's coming down and it's finding support on bull market support, not bear market support. So it's kind of telling you that it's getting ready to break out. So here's another nice risk reward, JC. I think we could go to all new time highs if my crazy count's correct. But I mean, it doesn't violate any rules.
Let me
So,
ask you this, Bartelloni.
sir.
Usually I'm just throwing you alley oops, but now I'm bringing the tough questions. This isn't like CNN or whatever. This is bringing you the tough questions, like time stops. Here's another one. You're the math guy. You're the engineer. We know for a fact that asset prices trend. Something going lower is likely to continue to go lower. Something go higher. It's going to continue to go higher, most likely, right? We know that for a fact. You spend most of your time, if not all of your time, looking for turning points in those trends. Do I have that right?
Inflection points, yeah.
Inflection points. All right. That's the fancy term for trend fighting. Looking for inflection points.
Like kung
How
fu
do you
fighting.
think about that? I think this is really important. How do you think about that? Considering you know the math, right?
Well, I'm not sure I understand your question. Like that I'm inherently contrarian or
No, I mean, you know for a fact that asset prices trend. You're
correct.
specifically looking for changes in trends. So why don't you talk a little bit about that?
Well, so
Is it because you're getting very well-defined risk parameters
yes,
because you know you're going to be wrong so quickly?
yes. And that's the key to the whole thing. It's not
Yep.
whether you're right, it's where you're wrong, right? And then where you are wrong and what you think you can come up with as your basic stop out is that range, right? Is that delta too far for you to manage that risk or not? And if it is, then you don't take it. If you're able on like a monthly chart to be able to get levels that are so tight and you start trusting like we used to fly, right? Trust your indicators. So when you're flying in the clouds, right, there's nothing to tell you what's up and what's down except what? Your instruments. So trust your instruments. So when a vast majority of the technical indicators you're looking at are giving you an idea that this level in the price chart is going to be important. You gotta step up and take a swing at the bat. That's the
Bart,
way I look at it.
I got a question for you. Do
Yeah.
you going back to the time thing?
Mhm.
Is there such a thing as like time support and resistance?
That's a great question. I would say yes, there is, right? So in the case of lit and tan, I've never really thought of it, so I'm going real just off the top of my head, Spencer. But in the case of lit and tan, that time stop is very important because the big corrections have all been the same. So if we exceed that, if we exceed that time correction and the market keeps going down a little bit more, let's say, that would tell me to give me a bias that it might be inherently weaker than I thought. But if it hits and I see a huge bullish engulfing pattern or a bearish engulfing pattern on that time, then that can give me an idea that, okay, my thesis has more probability. It's never correct 100% of the time, but my thesis has more probability that I might be correct here. So after a certain amount of time, works. The other thing too is when you're able to find these price and time correspondence or square out, or you use some other cycle and it doesn't hit at that point, then your thesis of it working is going down. So I would say that's technically something you could think of through like a time
Yeah.
stop.
Okay.
Good question. Yeah, I never really thought of it, dude.
There's
Yeah,
a
Bartelloni, we
help
got
with
we got to
lit.
give the people what they want. The kids
Yeah.
want to talk about the cryptocurrencies. I know you brought
Yeah,
a Bitcoin chart. Talk to me,
yeah,
baby.
yeah. I see it's going higher. This is one of those times, JC, when this is kind of a Ray Charles count, honestly.
what does that mean?
It means it's kind of, you can kind of see it, right? It looks like we're about ready to have a fifth wave parabolic blow off, if you ask me. So all I did here is there's my Elliott wave count. I don't break any rules. That's the first thing I always try to do. As long as that's okay, I feel good, right? But what I did is if you look at that blue arrow, that's the first measured move up from the all-time low to 3 or B. Then all I do is I want harmonics of that. I want fractals of those moves. So I use 1.27, square root of 1.618, and then I use the 1.618 fractal, right? So you can see those targets up there. I'm having a tough time with them, but those are realistic targets. I don't even think we finished a wave 3 yet. So I would imagine in the near term, which it's kind of doing, it's actually setting up for a buy pattern. JC, I didn't include that. Good. But I think we're maybe a little bit more of a correction, which I'd buy. That'll finish wave 3, which I think will be a bigger correction, and that you can see that. And then once that correction's over, this thing's going up, and I think we could see those upper targets that we see there. And then it's really time to get serious about maybe taking some profit, because I do think that this thing is going to correct pretty significantly.
Yeah, but how are you thinking about a breakout above the 2021 highs to sort of confirm that trend? Are you thinking about it at all? Do you think we rip from here?
I think we go down a little bit more from here, and then we rip higher to finish the sequence, right? And then we have a bigger correction, and then we have a whole another 1, 2, 3, 4, 5s going up to finish the fifth wave. But we are in a fifth wave. That's pretty easy to see. It's just I think we're in the middle of it, and we've got higher to go for sure.
Can you I'm having a hard time seeing that y-axis. We're talking about $120,000 for Bitcoin. Do I have that right?
Yeah. That sounded about right. Yeah. That and again, that's an initial target, right? It could go blow through there.
So we only initially get to 120.
Well, yeah.
That's a double from here, Bartellones.
Yeah, I think we could go to 120. All I'm trying to say is that's an initial target. We'll have to see what the market does. It could go a little higher, could go lower, right? That's why I have big question marks, and I have 2 targets there right now. But I think these are pretty good targets, and I feel pretty good about the flow of this chart from the perspective of my count. It's not necessarily, I'm not doing the subwave of the subwave and all that crap. This one kind of came to me pretty quickly. 1, 2, 3, 4, 5. I think we're in the fifth wave. I think we're about halfway through it. But once we get up into those 100,000s, you might really want to start paying attention. And it could cook off too, right? Can you kind of see it, JC? You can see it's just kind of starting to go, okay, let's get this party started.
Bartelloni, every time I talk to you, I'm more confused than when we started.
That sucks.
You know.
Well, let me confuse you even more.
You and I had lunch with my wife once, right? And we walked out of there, and she looks at me. She's like, I don't know what the hell that guy was talking about.
Well,
I'm like,
JC,
Don't worry, sweetheart. I didn't either.
JC,
Don't worry about it.
JC, let me blow your mind. I know you got to pay the bills with the commercial stuff, but Spencer, call up that last chart of the King's Chamber. See, this is so great. This is why I love
This
it.
is what I'm waiting for. Let's go. What's this?
You got it on there? So, okay. JC, Spencer. They've discovered etchings on the walls of the King's Chamber in the Great Pyramid. And they're all over, and they're all the astrological signs and all their decans and the exact space where they need to be. The King's Chamber is actually an astrological star map, dude. And Da Vinci and his Vitruvian man, he actually encrypted the locations of all of the different chambers. And throat chamber, i.e., the throat chakra, has been discovered. It was discovered by Mr. Robert Edward Grant, whose work this is. You got to follow him. There is some amazing stuff. The last thing is, yes, that is DNA on the walls. We discovered that helix nature of DNA in 1957. Right now, they're dating these walls of the King's Chamber to be 10,000 BC. And I'll just leave you with that, brother.
How? And I ask, how can that be? And I guess that's the question, right?
Boom.
That's the question. All right.
Look at
Wow.
JC. I think I left him speechless, Spencer.
I have more questions than ever, Bartelloni, but we just don't have that kind of time.
Yeah.
Couple of things. So
Yeah.
big shout out to Connie Brown, right? If you want to learn more about the circles and the lines and the numbers and all that
She's
stuff,
amazing.
Connie Brown. What about, is it the Di Miletto levels? What's the Italian guy with the levels? Di Marco?
DeMarc levels?
No, not DeMarc. Like Di Matello. It's like an Italian guy with his levels. There's a book. You had me read it like a zillion years ago. Di
Pesavento?
Martino
Larry?
levels.
Oh,
No.
DiNapoli levels.
DiNapoli levels. I knew it was
Yeah.
one of these Italian names. DiNapoli
Italian.
levels.
Michael Jenkins.
Am I just
Joe
being racist here,
DiNapoli.
just throwing out names with vowels?
No, I'm Bartelloni. Larry Pesavento.
So hold
Michael
on, go back.
Jenkins.
Yeah. So what is it again?
DiNapoli.
DiNapoli levels. Okay, so DiNapoli levels.
DiNapoli.
What about Larry
levels.
Pesavento? Larry
Yep,
Pesavento is the, that guy emails me all the time.
Larry's the best. He's a
Dude,
riot.
he's the man. He's like
we have a
100,
ball.
dude.
Yeah, and he's been doing it for 50 years, and all he does is ABCD.
Dude, he
Yeah.
is the man.
Michael Jenkins, and then
We gotta
obviously
get.
Connie.
Can we get Larry on here?
And Larry,
If
love
he-
to be on. Let me
If
email him
he
and
emails
put you guys
you,
together.
then invite him on the show. What do you want me to do?
Invite him on the show.
Yeah, I'm on Larry's show all the time. He does a commodity.
Yeah, I
show.
go on his show too. Yeah.
But
Okay.
yeah, JC,
Hilarious.
I love being on with you guys. I appreciate it. I love what you're doing. You guys are awesome. I really wasn't following the whole red font thing and white, but I think the red looks good. But over to you guys.
No, the red looks good. I'm not beefing with the red. It's the black on the red that I can't see. So I want
Dude, you
if
might be
the-
colorblind.
if the cell is this red, because the market is this shitty, I want the font to automatically change to white. I'm just
Why
throwing
not
that out there.
brown?
We'll have a meeting about it.
Why not brown?
No.
Brown on red? No, it's even worse.
It's shitty.
I like where your head is at. And on that note,
All right.
thank you, Bartelloni.
Enjoy the
Go
surf, Bart.
surfing.
Enjoy the surf.
Yeah, JC will be in touch. Be good, guys. Thanks so much. Lit
Adios.
and solar. Who'd have thunk it?
Who'd have thunk it? Barts Charts, ladies and gentlemen.
Yeah, his Twitter handle was up on the screen the whole time. It's also the link to his site and to his Twitter are in the description on YouTube. Check it
he
out.
left
I highly
Twitter.
recommend it. He always comes correct with some correct. When I say collect,
Oh, he's
correct with some kind of funky thing at the end there, which is what I was waiting for the whole time. But going back to the conversation about Bitcoin and also about geopolitics and stuff is, even if you have a conviction on something like war, for example, you don't always know how it's going to play out. I would have just assumed that war would be like bullish for Bitcoin, and look what happened over the weekend, right? So, I don't know. Just sometimes it doesn't go that way.
Why would war be bullish for Bitcoin?
'Cause it's bullish
I
for
would
stock.
assume any sort of destabilizing thing would be bullish for a decentralized cryptocurrency.
Right.
That's bullshit,
Got
Spencer,
it.
because it's just a risk asset. All
That's
that storytelling about all that stuff is nonsense. Just a risk asset.
Yeah, perhaps you're right. Perhaps. Okay.
Well, the market keeps
9:37.
proving that, to your point, Spencer.
9:37. What's going on here this morning? Goldman Sachs had earnings. Yeah, came in above estimates. Last I checked, the stock was trading up about 5%, although I haven't looked since the open. That was just based off pre-market action. But the top line beat, the bottom line beat as well. Top line, oh, those are big beats, actually. Wow.
Monster beats.
Yeah,
Monster.
those are pretty massive beats.
Yeah.
Cool. Not it's funny, because we're coming off of Friday. JP Morgan, whose report was the headline numbers were okay, but they were drilling down on the net interest income and the guidance there. So the street did not like JP Morgan's report, but they
They didn't
like
like
Goldman
any of
Sachs.
the banks. They didn't like any of the banks on Friday, really, right?
Yeah, that's true. But JP Morgan led the way, right?
100%.
And then Goldman Sachs this morning looking all right. Schwab was trading quiet. They also reported earnings, but it's pretty quiet this morning out there for Schwab. But Goldman Sachs, yeah, good morning so far.
Great morning.
Market opened 8 minutes ago. Let them dance, fellas. Let them
Well, the
dance.
morning's been since 4 a.m., right? So,
Tell him, Spencer.
okay. What else we got here? A couple other things.
No, that's it for earnings? No other earnings?
Today? This morning is just Goldman and Schwab. Tomorrow we get some more banks, right? So I think we get what Morgan tomorrow. Let me pull up my calendar right now. We should have a calendar up, but we don't. Yeah, tomorrow is Morgan, Bank of America, and then we get on to like PNC, J&J, all that good stuff. But that's it for the earnings here for
All right,
today.
quick little rundown. Dow futures up almost a full percent, 360 points. S&P futures up 40 handles, about 75 bips. NASDAQ 100 was the leader this morning. Now up only 60 basis points, about 100 points. Well off the highs. Bond futures continue to get the crap kicked out of them. 30-year bond futures down 1.4% today, lowest level since Thanksgiving. Copper futures up almost 2%, $4.33. You got gold flat, silver up 1%, up to 28.60. Crude oil down 75 basis points, hanging around 85 bucks. Dollar mix with the yen selling off again with bonds. Volatility index 16.5. And then over in the old funny money, you got Bitcoin pretty much flat, 66,000 on the BTC. You got Ethereum up 1.6%, right around 3,200, and Solana 150 down almost a full percent on the day. Total crypto market cap 2.34 trillion.
Couple other things before we bring Mr. Cully on to talk commodities. Just because we didn't have a show on Thursday and Friday, I want to bring up the chart of GL. Do we have that Globe Life chart? It is not every day you see a $10 billion stock get cut in half in one day. And that is what happened on Thursday.
Who?
Globe Life, GL. We have the chart.
Never heard.
They're a insurance provider, I think.
They were an insurance provider.
No,
What
they
happened?
still are.
What happened?
A short report from one Fuzzy Panda Research, who's been around the block for a minute.
Hold on, this is a research company called Fuzzy Panda.
Mhm.
Is this a Florida insurance
Seems
situation?
legit.
No, this is like I'll be honest, I started reading it and then I stopped, so I got maybe like a fifth of the way through. It was long, but it was alleging all sorts of fraud, right?
It tends
Like
to be
just
long.
straight up
Sure.
fraud.
They do that on purpose.
Fuzzy Panda would be a
Very
great meme coin name, right?
Fuzzy
do
Panda
you-
is definitely a meme coin already.
How do you know it isn't? Yeah, I was gonna say.
I don't know. I don't think it is. I'll take the under.
Anyway, the stock it bounced a little bit on Friday, but Thursday, man, from 10 to 5 billion in one day. Whew. Don't see that very often. What else? Oh, that Apple candle also on Thursday. You guys see that? I know
Yeah.
you did.
Apple is the inverse play, boys.
Apple is
I
the
think you
inverse
buy-
play of
I
what?
I think you buy Apple if you're a long-term investor. You don't even think twice. You just buy Apple all day right now.
All right. I definitely am
listen,
not going to do that.
If you've ever done that before, you've been rewarded. What, for 20 years now? So
What the fuck does that have to do with now?
you got history on your side.
I guess.
It has to do with the fact that they're a great company.
Oh my God, here we go.
I'm gonna say that every time JC brings up a chart of anything that happened in the past. What the fuck does that have to do with now?
Yeah, can we soundboard that?
I can't with you guys. I can't with you guys.
Listen,
You can with me. Look at the candle.
But JC, even you, so JC, just for context here, is someone who doesn't really believe in buy and hold. But if you buy and hold with the right company,
That's not true. I have an entire portfolio that buys and holds. Like,
you've owned Apple for a very long time then.
I'm long Apple.
And it's been very good to you. So that's all I'm saying. If you
Great.
go back to the well and buy weakness in some of the greatest companies in the world, it's not a bad investing strategy.
Oh, there's so many other talk about the opportunity cost of sitting here in freaking Apple. Oh,
Really?
I don't know, man.
Really?
dude.
It's not like we're not talking about like Intel here, right?
Buying Apple here is like betting that the Mets are going to win the World Series. Like, just stop.
I like that bet too.
I bet you do.
Love that bet.
I don't know if
No.
Anyway,
I hope they do. I got no beef with the Metropolitans. I hope they do. Man.
hardcore candle. That's what I wanted to say. Hardcore candle on Thursday, and you know, you can always tell. This is a telltale sign that a move is technically driven, right? Is when the headlines are attributing it to an analyst note, which
How
I
about when
saw.
they're not technically driven? How can you tell?
Okay. I knew that. I should have seen that one coming.
Can we talk about commodities instead of these shitty tech stocks?
I have charts, and I would like to talk about all of them.
Okay, can we bring
yeah.
in Ian, please?
Oh, yeah,
Yeah.
we'll bring it in and then
For this conversation as well.
wait. What are your charts?
Bring in Ian and we'll talk about it.
Okay,
Oh,
okay. I'm bringing Ian on. Okay, everyone,
Ready
chill,
to go.
chill.
Ian Colley in the house.
Happy Monday, guys.
Happy Monday to you. Get that mic a little closer so we can hear that lovely voice of yours.
There we go.
Oh, there we go. Can we start with copper hitting new 52-week highs, please? Come on.
It's impressive. It's impressive, right? Taking out last year's high, January's high.
Slide two,
next
Spencer.
Target around 487. You know,
Why?
for copper.
Ooh wee.
Yeah.
Is that a pretty chart, Strazza? Strazza, for the record, these are the types of charts that we were buying a year ago, but they were all tech stocks, if you recall, and growth stocks and like, you know, communications and stuff like that. Remember?
We're still buying them, but now they're commodity stocks.
Yeah. Interesting, right?
Yep. So a lot of failed breaky going on, though, Ian, in your world, no?
What are you seeing in terms of failed breakouts?
Materials, really, and the material subgroups, right? I think XLB, if you want to throw up that chart, makes the point pretty well. I think the natural resources ETF, IGE, is just kind of sitting there on the verge of failed breaky. And then you have energy, almost no failed breaky. Energy holding in really well. I think, yeah, there you go. I think that this is a theme and that these should follow similar paths. So I think we can ask ourselves right now, today, after the action from last week, is energy going to be right or are materials going to be right in terms of the spiders? Just flip back materials for everybody to say, right? So we got the breakout in materials. Everything's looking good. Multiple touches, right? At the upper bounds of this consolidation, we went and then we failed pretty miserably on Friday. Trying to repair it today. We'll see, we'll see how we close and we'll see what the next couple of days bring. Then flip back to energy. Really nice, holding that breakout. Sure, got a red candle Friday like everything else, but looks a lot better. So gun to your head, who's right here?
I don't know. Energy's right in terms of energy's the play. And energy has been the play for, 3 years now?
Yeah.
The market comes under pressure. We're in a rising rate environment. You want to be leaning into energy. You don't want to be leaning into materials. Now, when materials when XLB proves itself and reclaims those former highs, then yeah, we can start looking at those names again. But
and let's remind everybody that the materials sector is a lot of chemicals. It's not necessarily like mining and like hard materials. Like it could be, a lot of that stuff is chemicals. So keep that in mind.
You want to see what the chemicals index looks like? I got it right here.
Looks like the XLB is what it looks like.
Yeah.
But but they're all giving back, like Freeport-McMoRan even. The natural resources ETF, they all look kind of similar. These stocks had been working. You don't think we lean into them the same way as energy, Ian, on this weakness?
Freeport's having new 52-week highs.
Yeah, SCCO's on the verge of hitting our secondary objective.
Freeport-McMoRan closed at a new 52-week high on Friday.
I'm really impressed with copper.
Can we throw up a slide? Throw up slide 3, Spencer, please. So, of all the commodities ETFs, this is the one that looks the closest to the CRB. It's been around since 06, so it's got some history. How do you feel about it? Because, we get a lot of questions from clients, investors around the world, like, what's the easy ETF to buy commodities? And, like, my answer is usually, like, there's no great one. And even with this one, I still would argue it's probably not the best way to take advantage of higher commodities. I still think you need to, be a little more selective in terms of the group of commodities rather than owning them all. But this one ain't bad if you're getting a ton of energy, right? It looks like CRB.
Yeah, if you're just looking to get long the CRB index, I mean, this looks great. I like going out, especially now. You saw, XLE versus XLB. I like looking at energy, finding the strongest areas. They're looking for some rotation, possibly into oil services and into those E&P names.
Yeah, I'm with you.
We've seen the strength, and I've been, I'm looking at these, tracking these relative charts, and not quite breaking out, but it's looking like rotation starting to move into those other industry groups.
Throw up the relative XLB, or it's actually RSPM. So this is equal weight materials relative to equal weight S&P 500. For me, it's all clear for this sector. If we can kind of confirm this scoop and score here, I think we get confirmation above 0.22 in the material score trend. Yeah, that's the score. We already got the scoop. I think energy is completing the score now. Very similar. If you want to throw up energy, it looks very similar. But these are the groups. I think that's where we're headed. I think we eventually get this confirmation. I think, like Ian says, XLB repairs that damage, follows energy. And I think we'd be looking at both sectors as a place to really find some alpha this year. I think alpha might be hard to find for a lot of people. If you're looking in these growthy sectors and tech and things like that, they've outperformed for so long. And they've really, really lost a good deal of momentum, both absolute and relative terms. Energy on a relative basis, that 200-day, that long-term moving average, not just flattening, but turning higher.
Yeah.
Overbought momentum.
Over bot reading as well on the 14 period RSI there.
Yep, you got it in materials relative too. So I think maybe patience here. We've talked about the run that these stocks have had, both materials and energy. So if they want to give some back, God forbid, right? I think they've earned it. You don't want to overthink it. And then I think they just pick right up where they left off eventually, right? And presume in the direction of the underlying trend, which is higher.
Absolutely. And I think like the materials chart that you shared earlier, that little failed breakout, just tell us, it needs a little bit more time.
Agreed.
Sean's chiming in the chat saying it's not a closing high. It is a 52-week closing high for Freeport-McMoRan on Friday, Sean.
What?
Huh?
What are you talking about, bro?
Freeport-McMoRan, 52-week closing high on Friday. Yeah, what?
Based on a weekly close?
52-week. Yeah. Did I say month?
There's a qualifier there that you're looking at the weekly close, right? Not the daily close.
Specifically, it is a 52-week.
Yeah, typically when
high close.
Numbers quoted, it's talking about the daily close, like in the Wall Street Journal and the Market Lab.
Why should I give a shit what the Wall Street Journal does?
Because it's like a language, right? So if 99.9% of people speak a certain language, maybe just get on board with it and speak the same way, you're going to confuse people.
All right, this is a 50-week closing high. It is a 52-week closing high. It is a 45-week closing high. I don't know what to tell you.
On a weekly basis.
What does the Wall Street Journal have to do with me? They're storytellers. I'm telling you facts. Facts only, baby. Tell them, Ian.
Great article in the Journal this weekend about golf. You guys catch the Masters at all?
Was that this weekend?
Yeah, it was great.
The same dude. It was the dude.
We were watching it together.
I know. I'm breaking balls.
Oh, so JC asked me. You asked me if Vijay Singh was playing. I was wrong. He actually did play. 62 years old. He played.
Vijay Singh. He's the man.
Yep. How cool is that?
Is he of Indian descent?
He's Fijian.
Oh, that's right. He's from Fiji. That's right. I knew that.
Big Indian community in Fiji.
That's cool, man.
Dude, the Fijians, the people in Fiji are the nicest, happiest people. Like, seriously.
Well, they live in Fiji. I mean, I'd be happy too.
Dawson, I've been here for like 2 hours. Still no clue if JC made it on The Price is Right. We would have known.
You're kidding me.
It would have been the first thing he told us.
Dude, can you imagine if I would have been on The Price is Right?
Oh, that's so good.
No, I was not.
You tried, though. Valiant effort, all you guys. You know.
Yeah, I'll share it with the recess. If you guys want to hit that bumper.
Yeah, cool.
I'm so psyched for this week, guys.
Like in general, just
happy tax day today. Congratulations, Dad, on another year.
Is that today? Don't normal people do the extension and pay in October like normal people?
Yeah,
That's what I'm doing.
I mean, most people.
I always thought only weirdos like my dad got extensions.
No,
I always thought that the weirdos are the ones who didn't.
Yeah.
I don't know. All right, let's do some recess and get out of here.
So The Price is Right was fantastic, by the way. A lot of fun. This is the group here. I'll throw a couple quickly. Just a couple of picks. Wifey, myself, some of the neighbors. We all got together and went to The Price is Right. Nobody got called up. Very disappointing. It's the big first couple of slides there, Spencer. You know, the girls got together. You know, they wanted to do like a theme. You know, because they assumed that if we had a good theme, that would increase the likelihood of us getting called up. I don't know. I think the
Can
whole
I ask what the theme was?
Well, if you put up the picture, and like I just said, you could see.
Aloha.
Oh, I'm looking at the wrong slide.
Yeah, so that was us. That was us. That was the crew. You go to the next one, little wifey and I. So I think that the whole thing was a scam. I think that the people there had already planned who they were going to get called up first. Like, I don't think that our like dress code and all that stuff like made like any sort of impact at all. But it was cool getting like those yellow tags like you see on the TV and stuff.
Yeah.
That was fun. It was a good time. So if The Price is Right comes to a theater near you.
Wait, so what this was just a show. This was just a Price is Right show, not like the show.
This was Price is Right live. So
Okay.
I don't know if it got on TV. I don't know.
No. Okay, so they have this near me as well. It's a show. It's not like you're going to go on to the main. You're going to graduate and go on TV. It's a show.
If it's not at the studio, it's not going to be on television.
Is that what it is? Yeah. So my neighbors were like studying, like before we were pre-gaming, and I obviously didn't study because I don't have that kind of time to study the prices of things. Like you guys even know, I don't know what a gallon of milk is.
You would have been.
One of my neighbors knew them all. Price of milk, everything, just crushing it one by one. He's like, the mixer, he like going. I'm like, damn, kid.
Why don't we do our own? We should do our own Prices Right.
Mm-hmm.
It'll be a blast.
No, I don't think so.
JC, how much does a gallon of milk cost? $8.
I don't know if this is true, but according to my neighbor, it was like $3.50. I think he said.
We're just gonna let him.
I guess.
We were just busy making fun of him because he pronounces it milk, like if it's spelled M-E-L-K, because he's got like that Pennsylvania accent. So he's like, price of milk. So I just remember that part. I don't even remember the price.
Two things. I'm with JC. Why would you choose to pay? You still have to pay. You don't get to not pay for an extra 6
For what?
When you file your extension, you just
back to the taxes.
Yeah. So that's Bad logic. Sorry, JC, you're teaching people bad lessons here. And
I don't
Ian
give
Tully,
lessons. I don't give advice.
Someone,
What I do is not for everyone.
he has a good accountant. I need more time with Ian to go over some of his work. Well, Ian's commentary is all over our website. Why don't you tell them when and where they can find you?
Please, yes.
If you haven't checked out, yeah, you know what? Why don't I do this? There should be a link in the description. There usually is, but if not, I will throw it in the chat right now. And Ian is routinely putting on commentary on the entire fixed income currency commodity complex, hence the FIC acronym there. So I'm going to drop the link in the chat, and we will be doing an event specifically with Ian here shortly. I will have more details on that later on this week. But if you want to check out Ian's work, you can find it here. His best stuff is available for members of ASC Premium. The link to that is in the description, but I just dropped the link to no, I didn't. Give me 1 second.
Jonathan,
Here is Ian's
plant-based
page.
milk, man. Come on. Drink milk from nipples like a normal person.
I had somebody made me a latte with oat milk in it this weekend. I almost threw up in my mouth.
Yeah, come on, man. Plant-based milk.
I don't know, that almond milk's pretty
All right.
good though.
It lasts longer in the
There's
fridge. I
Ian's
don't,
link in the
you
chat.
know.
Yeah, that's sketchy. When things last that long, I don't trust them.
Yeah.
No.
No.
My recess was I went to Atlantic City over the weekend for the AC Beer Fest festival. Beer Fest, yeah.
Well, that's
Good
you were
time
there.
was had.
Sportsbook.
I was what?
You went to Atlantic City?
I thought you were there for the Caesar
Yes.
Sportsbook.
On purpose?
So this is so check
I'm
this
glad
out.
you're
So
okay.
I went to a beer I went to a beer festival, and check this out. So we're at a casino. We're at a sports book. This is last Saturday night, right? If you're not familiar with a sports book at a casino, it's a section of the casino dedicated to betting on sports. They have seats. They have a wall of TVs. You go to the window. You place your bets. We go up and we say, "Hey, are you guys going to put?" Because there was a big UFC fight. Are you guys going to put the main event up on the big screen? And they say, "No, because we don't have it because of pay-per-view rules." And we're at Caesars, by the way. So this is not some podunk casino. This is Caesars. Because of pay-per-view rules, we would have to buy it for every single TV that we have. So no fight. So at a casino, I had to go up to my room, stream it on my laptop to watch the fight.
That's terrible, though.
That's
They should be
crazy.
embarrassed. That's really bad.
But we were
Atlantic
able to
City
bet
does
on
a
it.
great job of already embarrassing themselves.
So we're
way
able to
past
bet.
that.
So we're able to bet on the fight, and obviously the main event doesn't end until like I don't know midnight or something, or maybe a little after. And so we go back down to the sports book to collect our winnings, and the window was closed.
Well, listen, let's just be happy you made it back in one piece. You didn't get mugged or anything.
Yeah, you didn't step on a needle or something, you know?
I mean, you got to know what you're in for. So it's you got to keep your eyes open. We saw some cockroaches. We saw some things we shouldn't.
It's a vibe.
Yeah.
It's a little grimy,
A little.
Oh,
to
yeah.
say the least.
Oh yeah. Look,
Did
man.
you know that the Monopoly game is based off of Atlantic City?
Everyone knows that.
I don't think everybody, you're from New Jersey,
Everyone where I'm from knows that.
right? Other people don't know that.
Yeah.
Although, like Marvin Gardens, see, he didn't know that. Boardwalk, Park
All right.
Place,
I thought everyone knew that.
all of those are like street names, like in the hood of which I don't think it was so bad when they first came up with the game.
No. Look, man, I was there for like 40 hours. That's about as long as you want to be there. So, good time. Ian, you got anything?
Yeah, no, one more. So congratulations to Scotty Scheffler on his Masters victory. This is his second green jacket now. I don't know if anybody has dominated the world of golf in the way he has over the past several years since Tiger Woods. So that was really cool to see him win it again. And the coolest part about watching the Masters is really the ceremony at the end. And it's like emotional when they're doing their walk off the 18th at the clubhouse, turning the scorecard and stuff. What he did was really neat because it was his second time winning. He waited for his caddy and had him kind of walk first. So that was cool. It's always my favorite part of watching.
Isn't his wife about to give birth like any day?
Yeah, so that's cool. That was awesome also. Jim Nance was asking him about that during the interview afterwards. So he's a good dude, just an absolute class act. A very religious guy. You know, he talks about his wife all the time. He's very excited. Very exciting for their young family. And again,
Great.
he's so good at golf.
You know what I think is cool, Strazza, as somebody who's not very good at golf? when they do the drone that goes through Augusta, like it starts like as that long road and then it goes like through the clubhouse. That's pretty sweet.
I mean, just watching the course itself is like an experience. I would just love to go and see the course. It's so beautiful the way they.
Oh, you know a fun fact I learned? When
landscape.
they give you the food, like the food and the drinks and stuff like that, everything's wrapped in green. So any littering doesn't show up on the TV because everything's green. I thought that was
True.
clever. I thought.
Wow.
That's smart.
And now the way you can do it, you can literally like on masters.com watch any golfer that you want. Like they have cameras everywhere, just like watching everybody. So the way you watch golf is changing so much. Thank God, because network coverage is.
I was gonna say it's probably by design. It's probably a good thing.
Yeah.
They're like, this can't get any worse. So let's just try some stuff.
Yeah. All right. It's Monday, which means we got the Flow Show with Steve and Sean coming up here on the channel at 11:30 Eastern Time. If you are a member of AAC Premium, you'll be getting the Gold Rush in a little bit. So stay tuned for that as well. And that's all we have. Thanks to our guest, James Bartelloni. Thanks to all of you for watching on YouTube or on X. Drop us a like. We'd appreciate it. Thanks to the chat for the questions. We love you guys. That's it. Go make some money. We'll see you later.
Happy
Adios.
See you guys.
Go get them. Yo.
I can't take no loss. I don't even know what it costs. I hit the ground, then it go off.